Then along comes Bitcoin in 2009. And as Christine Lagarde called it, it's an escape hatch. It means that you can go to a virtual gold standard, except this time you can own it yourself. It's unconfiscatable, it's uncensorable, and it's absolutely scarce. So it's better than gold in many ways. And this is why it's now worth almost $2 trillion, is that the world's population is realizing the shortcomings of fiat money and gold, and they're seceding from the global economy, and they're joining the Bitcoin economy. So Bitcoin economy and the global economy is an emergent parallel global economy that's challenging the old world order with a Bitcoin standard. And to your point, yes, it would mean the dollar would no longer be world reserve currency, and the dollar would go the same way as the British pound and all the other currencies that were the world reserve currency going back 300 years.
Bitcoin may not be heading for the breakout many expect. While June predictions point to a new all-time high, experts at 10x Research foresee a bearish consolidation period. Still, Max Keiser remains bullish, predicting a wild climb to $850,000 in 5 years, driven by Bitcoin's superiority over gold. The message? The real ride is only beginning. Let's watch more clips from Max Keiser's explosive interview. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up, and you can always change your mind later. Now back over to Max Keiser.
So now Michael Saylor has taken that lesson on and made it 100 times bigger. He's using the stock market effectively to kill the stock market. Because if everyone and many everyday companies are announcing, we're doing the Saylor plan, which means that, like a GameStop just announced a few days ago that they had $5 billion on the balance sheet doing nothing, they're going to now start buying Bitcoin. There's a company in Japan called MetaPlanet that's been doing this now for over a year. They're the best performing stock in Japan. There are companies in South America now doing this, the Saylor plan. They are using the tools of capitalism to kill capitalism, exactly as Marx predicted, right? So they are simply using the cheap money available in this incredibly overinflated, indebted world of finance to borrow cheap to buy Bitcoin. And the average rate of Bitcoin appreciation over the past 5 or 6 years is, 50% a year. So even if you're paying, 6 or 7%, you're making an incredible spread on the arbitrage. And of course, they're borrowing at a lot less than that. They're borrowing close to 0%. So that's the only good use of the stock market right now, are corporations using the market to fund their Bitcoin purchases. If you have your retirement account, you want to outrun inflation, right? So inflation is something that is eating up your return. You want to outrun your inflation. Well, the stock market typically returns something like 7% a year. That's the average annual rate of return in the stock market. And inflation is really running a lot higher than 7%. The reported inflation is cherry picking numbers to make it a lot lower than it actually is. If you were to calculate inflation based on stuff that people actually buy, like healthcare and education and housing, the actual inflation rate is closer to 15%. So you have to make 15% a year in the stock market just to break even, which most people don't do that. Warren Buffett's annual rate of return is roughly 22, 23%. That's really the only thing Warren has delivered over the past 30 years of his career, which incidentally doesn't really beat the market by much at all. So there's the stock market's not really going to get you there. The bond market, well, we're at the end of a bond bull market that started in 1980 under Reagan, and it ran from 1980 to 2022. And the bond market rally that started in 1980 ended in 2022 when the Russia-Ukraine conflict kicked off. So the bond market's now entered into a bear market. It's in a protracted, cyclical bear market. So the bond market's definitely not the place you want to be. So then there's gold. Well, gold's been acting great because it's an inflation hedge and it's going to keep up with inflation. If you want to maintain parity with inflation in retirement, gold will get you to that place where you're not getting eaten to death in your retirement by rising inflation, but it won't do better than inflation. Gold is not going to hurt you.
Yeah, gold's not going to hurt you. Okay,
it's been reliable for 5,000 years, and it has recently broken out of a kind of a sideways move. It's very interesting to study the gold market, Jimmy, because the gold price gets suppressed. It hasn't been allowed to really have price discovery, free price discovery for years, and the same thing in the silver market. Because it does, the Wall Street brokers and bankers don't want gold to do well because it's competition for them. And so they use derivatives to suppress the price of gold and silver. And the way that they do that is every time somebody shows up in the futures market to buy, let's say, $100,000 worth of gold futures contracts, Wall Street will counterfeit and sell $1 million worth of gold futures contract at the market to crash the price. Counterfeiting futures contracts is another counterfeiting scheme. It's called naked short selling. It's technically illegal, but it's widespread. It's one of those things where there's a law in the book, but the law is not enforced. So naked short selling is illegal, but it's done quite regularly. And this has been the way to keep the price of gold and silver down for years. But what's happened is people are so afraid of the inflation genie having come out of the bottle now that they're going to the futures exchange and they're demanding physical delivery. So you can't play that game. You can't sell naked shorts and have the same impact. So the price of gold has been unleashed. It's now finding its true price discovery. So the gold, 3,000, 4,000, 5,000, that's what we're going to see in this cycle. But with Bitcoin, you have, it's built on what are called private keys, and those private keys are held privately. And they're not as subject to manipulation in the futures markets as you would find in the gold market. It's truly decentralized. So you don't have the same risks and problems that you do in the precious metal markets. You do see some of it because volatility equals profit on Wall Street. So if you can create profitability, if you're in Wall Street, you can create a lot of profit.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.